Thanks for tuning in. You're watching Markets Tomorrow and I'm Nikunj Dalmia.
Good to have you all with us. I'm Megha Chada. Well, it's one day to go for expiry, so what should you be watching out for? We'll get on board some expert voices, of course. Vikas Khemani, CEO of Edelweiss Securities, would be with us, as would Nipun Mehta, founder and CEO of Blue Ocean Capital Advisors. And we also have Ashwini Gujral, of course, fund manager at ashwinigujral.com, to take us through the technicals.
Look at Indian markets, and it was a day of a good start but a poor close. The early morning gap up start or the early morning flourish was not good enough. Nifty, even though it has closed exactly at 6,200, the price pattern was not all that encouraging. It was a classic V. We started up, came down, and then we recovered in the last 1 hour of trade. The capital good index today was the big story, along with some price action in the consumer durable index. The consumer durable index today has appreciated by about 3% plus. That was largely led by Titan. It was a volatile day for the bank Nifty, which has closed absolutely flat for the day. The uptrend, however, continued in cement names like Ultratech, ACC and Grasim, and Bajaj Auto was the biggest gainer on the Nifty. In terms of prominent gainers, HCL Tech, Grasim and Infosys. Nifty losers, money clearly moved out of metals for one more day, and some prominent losers were Tata Steel and GSPL.
Not just that, the broader markets actually managed to hold their head up above the water quite firmly at that. In fact, both the mid-cap as well as the small-cap index ended with some very smart gains, actually, close to about 1/3%. It was the day for auto ancillaries and IT once again. So I just want to touch upon some of the names from here. You had a Persistent Systems rising another 2.5% today, a fresh 52-week high being clocked in. Apollo Tyres also had a good run, so a fresh one-year high coming in for this one, along with that and Amar Raja Batteries. Property and real estate stocks, a couple of select names did very well here. Shoba Developers, Godrej Properties, move of about 5 to 7%. Cement, of course, Nikunj touched upon, but even on the broader end of the market, some of the names like India Cements, Heidelberg Cement, of course, showed good traction. JK Lakshmi did very well for itself. A federal bank, that was an interesting name. Of course, you had the CCEA giving its go-ahead for FII hike, and on the back of that, you had close to a 2% move coming in on a federal bank. And last, I just want to touch upon some of these banking license hopefuls, because the Bimal Jalan committee report was submitted today. A 3% move on an LIC, L&T Finance Holding, even an IDFC for that matter did very well.
Also, Nifty may have closed exactly at 6,200, but in simple terms, all markets have done is that they have simply reversed this Jan's loss on assumption that the emerging market currency or the emerging market route will not spread like a contagion, which is comforting money managers, and money is coming back to quality emerging markets like India and Indonesia. But net markets are still down for this year. If I map how markets have done from 1st of Jan, the biggest performing sector is still IT. If I look at the top 4 outperformers, are the biggest gainer on the Nifty for the year 2014. There are 2 IT names and there are 2 pharma names. So optically, Nifty may have gone to 6,200, but in terms of a trend, a price move, in terms of a direction, I think nothing has changed. Ashwini Gujral is also ready. Let's connect with him first to really talk about the technical trend. Ashwini, volatile day, a very, very volatile day.
Well, since there is no great momentum, since the participation is fairly low, by that I mean how many stocks are moving higher. Every day, we start with a good market breadth. By the end of the day, the breadth comes down to 1:1. So I wouldn't even call this a rally. It's an upswing. Like we have downswings, we have upswings. Once all the short covering is done, the upswing is over. Broadly 59.50, 63.50 holds on. Now it's not necessary that we'll go all the way up to 63.50. Somewhere in between the rally can terminate, and it'll take a simple thing like something going wrong in China, like what we are hearing from Europe that is coming in. So the market is basically day on day till the election outcomes are not announced. I would think we may look like we are outperforming because some aspect of the election is getting discounted, but once the election is over, all that outperformance will go out of the window and we'll just follow whatever global markets are doing.
So while we don't have a clear, trend emerging on the indices right now, Nipun, do you think the leadership that we've seen from the IT as well as the pharma pack is likely to continue? Because, given that elections are around the corner as well, people will look for safety, and these pockets can expect it to be continued to doing well.
Sure, I think that this is exactly what we had opined on, suggested in the last show as well. I think clearly IT pharma likely to be acting both as defensive bets as well as any increased allocations that any funds want to make. I think there's a fair amount of uncertainty coming in out of the elections for a lot of the funds to get allocated to sectors which are sort of significantly undervalued. You could look at capital goods, you could look at infrastructure, you could look at real estate, several sectors which probably quoting at ridiculous valuations, but too much of an uncertainty on the turnaround as far as the economy is concerned, as far as elections are concerned, really for that to turn around. So our sense is, yes, you'll probably see continuing interest, investor interest as far as IT and pharma are concerned till the uncertainty is out of the way.
Because as a broker, what is your take on the Nifty range? Do you think in the short term markets are unlikely to do anything special and we are clearly trapped in a range and we will remain trapped in a range?
Absolutely. I think in absence of any triggers and fact that we have a big political event which is going to be sort of considered as a game-changing event, I think investors are sort of right now in two minds, or one is not sure what to play. So as and when you see some sort of surveys coming out which builds sort of conviction towards the outcome, some flows trickle in, but I don't think people are going to make a big call before the actual result outcome happens, because I think we have seen many times surprises coming on the election outcome and one cannot be very sure till the time it is done. And also politics is such that any development can happen from now to actual election. So I think this period would be fairly sort of range bound unless some momentum towards political bill. So as I said that earlier, that if sort of conviction starts building closer to the election, that there are no more big uncertainties left, then I think probably investors, there might be a pre-election rally, but very difficult to kind of predict at this point in time. So hence you will find volumes very low, actions very low, I think flows also being muted. But I do feel that election outcome, if let's say comes in a positive manner, a decisive government comes in, then you will see foreigners sort of going overweight on India in a meaningful manner.
Nipun, minus IT and pharma, what are the other big trends? Where are you seeing some correlation trades?
Well, you could clearly look at export-oriented industries. Clearly the weak rupee, of course, that would typically end up including a bit of pharma and IT as well. But clearly the continuing weak rupee that is there is something that's benefiting a lot of these sectors. I think the private sector banks have shown clearly much greater strength in comparison to the PSU banks, and that's where again the strength continues. Our sense is that's again a degree of outperformance that you'll continue to see as far as that space is concerned. Most of the other sectors that are there, whether it is metal, cement, infrastructure, capital goods, you'll probably see a few days, 1 or 2 days of interest that could ensure that some of these stocks move up intraday or for a few trading sessions, not necessarily on a sustainable basis, is something that you're likely to see a lot of investor interest. But our sense is, yes, beside IT pharma, you could see just a bit of traction as far as the private sector banking space is concerned.
Okay, so exporters and private sector banking space is what they're looking to focus on. Let's take a quick break. Come right back with lots more discussion on the other side. Great to have you back with us on Markets tomorrow. A lot of factors to be watching out for, Nikunj. We've got the F&O expiry, of course, coming up, given that Thursday is a holiday. We've had the Bimal Jalan report also being submitted on the new licenses. Power Grid Board, I believe, is also meeting on dividends. And along with that, political developments continue. The third front is now official. And, of course, they've also had a press conference about that. Given all these factors, Nikunj, which one's going to be the most critical? Is it going to be the expiry?
One is the talking points. The talking point surely would be third fund is official, 11 parties, what kind of political implications it would have, what kind of political ramifications that would have, for the May elections. But that is just a talking point. That this news will not be a market moving news, at least for tomorrow. Tomorrow's expiry. There's a holiday on Thursday, which means bulk of the rollover, bulk of the F&O activity will happen tomorrow. Rollover this time around, at least for the Nifty, they are way below the 6-month average. For stock futures, the open interest addition has been rather rampant. So it's always difficult to call what will happen to individual stocks on the expiry day. But the talking point could be politics, but the real story would be F&O expiry.
Clearly. Let's talk about one of the sectors or segments which has started moving quite a bit, despite the fact that the fundamentals, really haven't shown that much of an improvement, really. That's the cement pack, where we've seen pricing come under pressure. We've seen input cost pressures and freight costs in terms of other input costs also building up. But Nipun, over the last couple of days, a lot of interest seemed to be returning here. And then, of course, the latest news has been that JP Associates is probably looking at selling another 2 cement plants also. So some bit of consolidation also taking place in the industry. Are you comfortable taking any exposure at all to cement right now, given the state of infra pack as well?
Well, but cement is one industry which clearly, as and when there is a lot of infrastructure spend, a lot of real estate spend, you're going to see clearly a degree of outperformance. We don't see that immediately happening, at least for a quarter or two. I think post that, again, post elections, you could just see a huge spurt as far as infra spend is concerned, as far as road sports are concerned, and that's something that could give a leg up, and that's when a degree of pricing power could come in. So our sense is cement typically has been going through the cycles of sort of excess capacity and then suddenly demand outstripping supply. Currently, where we are at is clearly an oversupply situation that is there. If one is willing to take a bet, probably for somewhere more than 2 to 3 quarters. So going upwards of that, you could see a fair amount of rally as far as cement is concerned, given the kind of potential spend that is there. At least in the immediate term, all of these are sort of 1, 2 day, 5 day movements in individual sectors that you're really seeing exactly the way we've seen it as far as maybe hospitality, sugar and all of that is concerned. So probably in the short term, you're seeing just a bit of a sudden cyclical investor interest, but for the long term, it definitely looks good if one is willing to look at beyond 2 to 3 quarters.
Ashwini, whereas the IT, pharma and banks, they always tend to occupy center stage, what is really moving in the backdrop is cement. Most of the cement stocks, be it large cap or mid cap, are having a nice session.
Well, I always get to hear all this fundamental news whenever cement is mentioned. Stocks go up because nobody owns them. They are under owned because of whatever reason, and they come down when everybody has them. So maybe the bad news is in the cement prices. And probably, there are some funds or somebody is getting interested in cement, because you can't have a 5-day rally because some mom and pop has bought cement. So somewhere the view is changing, and when the good news comes in, these stocks will be 15-20% higher. So I would think you still have at least another 10 to 15% on the table, even on the cement stocks. Ultratech is a favorite there. So you could see 1950, before a lot of news comes in.
That's about cement, but let's also talk about metals, Ashwini, because that's the biggest bleeder in today's markets. In fact, if you look at the Nifty, the top 3 losers are from this pocket: NMDC, Sesa Sterlite and a Tata Steel. What are you reading on the charts for these 3? Any other metal name that you'd be comfortable taking or advising fresh positions?
That's for me?
Yes, that's for you, Ashwini.
What's the question? Please repeat.
Yes, on the metals pack, we saw a cut of close to 2% on the index, and NMDC, Sesa and Tata Steel, they were the three biggest losers on the Nifty as well for today. Any names that you would be comfortable recommending positions?
See, again, there is some story coming from China in terms of, the lenders are not giving fresh loans to property developers, etc. So as long as that China story does not sort itself out, all metal stocks will remain under pressure. They have gone down even when the market is rallying. Whenever this market turns, I think they could go down even harder. So there's no question of buying them. On all rallies, all the metal stocks should be sold into.
Because let's talk about specific names and specific pockets now. What do you make of the price action in financial as a group? Do you believe the asset quality stress is here to stay, or do you think the risk reward ratio is now favorable?
Absolutely, I think I think if you ask me, next, even if political environment changes, in my opinion, you will see next 3 to 4 quarters asset quality issue getting worsened, and I think you will see, especially from the public sector enterprises, the numbers getting worse, and I think something will have to be done. And hence I think if you see, in my opinion, banking and financial services, PSU, which is almost 75% of the total market share, I think it's a big cause of worry, and we do think that asset quality issue will continue to deteriorate, and something needs to be done. And on the top of it, you have a capitalization issue. So that is one big worry. But here is how you look at positively. There's opportunity out here, that I think this shortage of the capital, shortage of asset quality issue, which is blocking down entire PSU sector, and also I think HR issues and manpower issue, I think also will, in my opinion, accelerate the loss of this market share in favor of private sector banks. And hence I think private sector banks will be able to, in next 3 to 4 years, capture much higher growth than the industry growth, especially players like HDFC Bank, ICICI Bank, who are very, very well sort of poised. So they are, I think, likely to get higher growth in next sort of a couple of years. And I do feel that private sector offers much bigger opportunity than public sector bank at this point in time.
Okay, hold on to that thought, gentlemen. Then we'll slip into a very quick break and of course continue our conversation on the other side. Back with markets tomorrow on ET Now. Let's focus on some of the key, the top stocks as well that you should be monitoring for tomorrow's trading session. Pranay is here with the list.
Well, the two stocks that dealers are suggesting are United Phosphorus or UPL and Godrej Properties, with a buy stance on each of them. United Phosphorus in trade today snapped its 4-day slide, and after hitting a 2-month low, it bounced off from those levels, taking support at the 100-day moving average. Dealers are indicating a very strong accumulation by HNIs in this counter, and they see the momentum taking the stock to levels well above 200 over the next 8 to 10 days, considering the favorable view that most of the money managers have on agrochemicals as well as crop care players. Then you have Godrej Properties, and on the charts, after a protracted period of decline and consolidation, today it showed the first big rise in nearly 2 months, backed by very good volumes, and the buoyancy was also reflected in mid-tier peer players such as Soba Developers and Prestige Estates. Now dealers are recommending a buy on this on a positional basis, and they see an upside of 20% in the medium term, because management has already indicated that there is very strong pipeline which enjoy high margin products in Mumbai and Delhi slated for launch this year, and also the management is very confident of on-track monetization in their commercial projects.
Ashwini, got to ask you a question on Aurobindo Pharma. Is that trade open still for tomorrow?
See, I'm not sure whether tomorrow also it will move like this, but definitely it's breaking out of consolidation and now headed to 590 to 600. But after this move tomorrow morning, you should go ahead and buy. I don't think that's a bright idea. You should wait for some sort of dip to happen. And whenever it dips to 495, 500, if it does, and that would be a right point to buy, because with the 7% move, your stop loss is now 485, 490. That could be wide for some people.
And Ashwini, then what would be the top ideas you're recommending for tomorrow?
Well, first one is Titan, which is a buy with a stop of 237, target of 254. CESC is a buy with a stop of 443, target of 465. And Infosys is a buy with a stop of 3760, target of 3840.
Vikas, or before I go to Vikas, let me get take from Nipun Mehta as well. Nipun Mehta, give me a stock idea. Let's not restrict ourselves to a market cap or a time period. Give me an absolute return idea.
In fact, Infosys and Wipro clearly stand out. I would also add Axis Bank. Clearly, given the fundamentals of this, of these three stocks, whether you look at it from a sort of short, medium, or long term, irrespective of the time horizon, clearly in terms of fundamentals, these three stand out.
And Vikas, very quickly, if you can tell us about your favorite election-linked stock and one stock which you would be happy to own right now, irrespective of the election results.
So I don't know what is my favorite election stock, because I don't know, one can really look at, I mean, I can tell you a basket of stock, but I don't know one stock which I can play on the, I definitely like, my favorite stock is HDFC Bank. I do feel that in next 5 years, that stock will give 25% CAGR return, which is a very good return, in this kind of market in equities. And I think from a turnaround perspective, if you were to look at, I think you could look at, players like Axis Bank, ICICI Bank, or, L&T, which will have a delta around the election, because I think the faith in the growth and turnaround will be much more than what it is currently. So I think probably these two stocks you could look at from an election perspective.
A couple of the private sector banking names turning out to be quite the favorite. Thanks very much, gentlemen, Nipun, Ashwini, as well as Vikas, for, of course, joining in today on Markets Tomorrow.
That's it on the show. Thanks for watching this edition of Markets Tomorrow, and have a great evening.